Greetings, members, one and all of the Salivation Nation. One man sends gold and silver higher with one statement. Let's explore. Indeed, this is actually a repeat of a video I did probably 6-7 years ago, maybe even longer. And it's just the power of words of one influential person can move the prices of gold and silver dramatically. And, we want to talk about manipulation. This is case in point, an example of it right here. Now, if that was his intention, it was pretty interesting and fascinating. I kind of doubt it was his intention, though, but this is an unusual circumstance. But given the psychology of the markets, it really doesn't surprise me when we take a look and find out exactly what I'm talking about. But here we can see the numbers. The tail of the tape is in the numbers. They're all green, which means they're all up, save for rhodium, which is down $800. Big loser of the day, rhodium. But look at that. Gold, silver, and platinum are up. Surprisingly, no movement at all in palladium, which maybe that data are not there, perhaps, but gold is up almost a percentage of a point, 0.9%, up $16.80 for gold. Silver, though, is the tail. This is the real story here. We're starting to see silver react normally. Typically, when gold jumps, silver jumps even more. And I believe it's jumping based off of what I'm going to tell you about here, as silver starting to reclaim some of its monetary status, or as a hedge, monetary metal as opposed to an industrial metal, based off of what we're going to share here in a moment. Up over 2%, almost 50-cent increase in silver, up to $23.10. Still a ways to go to recover some of the losses that it had seen over the past couple of weeks here. This leaves the gold to silver ratio narrowing a little bit here to 81.95. Still very close to 82. Still way too wide in my opinion. But nonetheless, that's where we are at. First, we're going to take a look at an article here from FX Empire that talks a little bit about this, how gold prices edge higher following the Fed decision. As expected, the Fed raised interest rates by 50 basis points. That's half a percentage point. And they rebounded slightly, gold prices did on Wednesday. The dollar moved sideways in the wake of the Fed decision on Monday policy. ADP private payrolls rose less than expected, but revisions for March were strong. Higher rates seem to be dampening growth. According to ADP, U.S. private payrolls increased by just 247,000, well below the 390,000 expected. There was an upward revised gain of 479,000 in March. A drop-off in small business hiring was the primary culprit for the disappointment. Big businesses with 500 or more workers compensated for some declines, adding 321,000. The Federal Reserve increased interest rates by 50 basis points as expected. The current level of Fed funds rates now is 75 to 100 basis points. Rate hikes will be ongoing where appropriate. The Fed will begin to reduce its balance sheet in June. The move was expected and is considered quantitative tightening. Although when you think about quantitative tightening, it's really just an easing of the easing. You know what I mean? They're not doing as much of the loose monetary policy. And buying the bonds and the like, and so therefore they're pulling back from that. But it's still happening. It's just not as much. They're just consider it like a faucet and a full blast, and they're just pulling it back maybe halfway. Water still coming out. And you know what happens with a leaky faucet? Your water bill goes up if it stays on. If you turn it on full blast and let it go for a month, imagine the amount of money that's going to cost you on your electric bill. Well, they're pulling them back halfway now. Still going to be very expensive. Next, I'm going to reference an article on CNBC, originally sourced from Reuters, how gold has gained 1% as the dollar dips after Powell flags inflation risk. And so there is kind of where we are at here. Gold bounded higher on Wednesday as the dollar and U.S. Treasury yields slipped after Federal Reserve Chair Jerome Powell, that's the one man, following an expected interest rate hike, flagged risk to the economy from soaring inflation. Now think about it. All of these price drops that we've seen in precious metals are based off of a myriad of different reasons. And I think probably some of the biggest ones is lack of industrial demand for silver, especially. But other factors, a lot of the, forecasting what's going to be happening with the Fed. Everybody's been talking about it. Well over 80%, almost 90% of people thought this was going to happen, and it did happen. So a lot of those prices were baked in. Well, now that it's happened, well, it could be that this might be the beginning of the rebound sooner than expected. I was expecting it to drop a little bit more based off of this. But Jerome Powell had to ruin everything. Or make things great, considering it just depends on your viewpoint here. Spot gold rose 0.8% to $18.83 and 41 cents per ounce at the time of writing this article, extending slight gains made immediately after the rate hike announcement, and it did jump as much as 1.2% at one point during the day. The dollar index fell to a session low as Powell said inflation was too high. That's right, there's the statement. Inflation is too high. Well, no crap, Carlton, instead of, the S word in Sherlock. You know what I mean? It's like this is obvious, But the fact that he's saying it is inflation is too high, stating the obvious, that's having a ripple effect on the market. Or, well, actually the stock market's up, surprisingly, because maybe they're saying, well, hey, you know what? This means that we're in the move to try to stave it off. And that's what these rate hikes are for. And making bullion more appealing for other currency holders, benchmark 10-year Treasury yields also edged lower. The market expected the May FOMC meeting to have a hawkish tilt, but the gold market viewed this widely anticipated 50 basis points hike as dovish relative to hawkish fears. That's interesting. Obviously, the dollar has been kind of under duress there, but this is according to Suki Cooper, an analyst at Standard Chartered. We maintain the view that gold will revert to taking its cue from real yields as the year unfolds, pressuring prices lower in the second half, but concerns around inflation, geopolitical risk, and slower growth have gold prices prone to upside risk in the near term. The Fed, in their policy decision released before Powell's speech, raised benchmark overnight interest rates by 0.5 percentage point, the biggest jump in 22 years, and said it would begin trimming its bond holdings next month as a further step in the battle to lower inflation. While gold is considered an inflation hedge, lower U.S. interest rates and bond yields reduce the opportunity cost of holding zero-yield bullion. Elsewhere, spot silver rose 1.2% to $22.82 per ounce. Of course, those are old numbers now, but we get back here and we can see where we are at on these numbers. It's pretty interesting indeed to see the movement. Now palladium is popping out a little bit here, $3 increase, but wow. And platinum really made a big jump, over $1,000 on the ask price. But I think a lot of this is because of Powell saying inflation is too high. And not only that, but we also have the possibility that with raising rates at this level, and considering that there's going to be more coming, that's going to bring us closer to recession. And recession tied with inflation, not a good combination at all. Not a good combination. Stagflation could just be around the corner here. And of course, people still don't want to talk about that too much. And it was not mentioned in either of these two articles, but it's a real possibility. The Fed is walking a fine line, too little, too late, in my view. And the metals are kind of reacting here in kind, based off of this statement. One statement by one man. That's all it took. And that is the case, and that was exactly what happened with the last Federal Reserve Chair. When this happened and occurred, was a statement that threw off everything what was expected when the Fed's decision was made, and that Fed chair was indeed the current Secretary of the Treasury, Janet Yellen. Pretty amazing indeed. So there you have it, fascinating indeed. Let me know what your thoughts are in the comment section below. Hope you found this video insightful, and I'd like to extend a multitude of gratitude to you all for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.